Oh, welcome, welcome. You've just entered the trading pit, your home for sophisticated takes on the crypto markets. It's February 29th, and here in the studio is JJ and Benjamin of J Labs. Man, today's top story, Morgan Stanley is evaluating spot Bitcoin ETFs for its giant brokerage platform. From the CoinDesk article, Wall Street giant Morgan Stanley is in the midst of performing due diligence to add spot Bitcoin ETF products to its brokerage platform for RIAs or registered investment advisors. And why can't even say it. RIA is important. Well, they hold 9.3 trillion in assets under management. It's a massive new funnel. JJ, these ETF volumes have just continued to grow and grow. I think yesterday we saw 673 million of net inflows. As these grow, what is the pressure for these TradFi giants to add to their RIAs, to add to more people so they can get in?
Well, you think about it, right? These people all have clients, and their clients are somewhat tuned in financially. They're not going to be following the day-to-day moves as much as we are, but these people probably watch like Fast Money on CNBC and whatnot. And at this point, the marketing arm of BlackRock, et cetera, it's just overwhelmed the market, right? You can't go anywhere without hearing the words Bitcoin. You have some kind of prognosticator on these shows 24/7. So they're feeling the FOMO, right? They probably have some friends that bought this ETF. They're up, 30% in a month. And they're sick of hearing everybody else being in, and they don't have exposure. And then you go to your RIA and you say, hey, I would like to buy this Bitcoin thing. And they say, oh, sorry, we can't. We don't allow access to that. So you can imagine how those people probably react. They're probably pulling their money out, and it's a kind of a game theory thing here, where people want exposure to this because they see how well it's doing. The results are undeniable. The price is going up, right? And it creates this feedback loop. And so just kind of an anecdotal story here that might be interesting. Back in 2016, I was working a regular job. I'd made some money from Bitcoin, et cetera. And I talked to an RIA because I didn't really understand how markets work, et cetera. And I explained, I have this Bitcoin. I was just wondering, you could help me kind of structure things and hedge it and whatnot. And then he obviously went to the spiel that they can't trade Bitcoin and whatnot, and that it was all going to go to zero. So at that point, in my mind, I'm like, okay, well, I'm not going to give this guy any of my money. He obviously doesn't know anything. So why, you think of that 1,000 times over with these people that are now going to RIAs and having a similar experience. What do you think they're going to do? They're going to take their money and go elsewhere.
I think so. And it's going to be harder and harder for the narrative to be around. Listen, this is not a good asset to have your money in. I think as they see these flows, and whoever had it on their bingo card that Larry Fink was going to be the master marketer to bring all the flows into Bitcoin.
Yeah, it's a beautiful thing, isn't it?
Yeah, that's crazy. Okay, so a little bit of speculation here. How long before Vanguard opens up the Komodo and allows in investors? It's been one of the stalwarts. It's the one saying no one's allowed to touch this stuff. How long? A year, 2 years, 6 months?
That might be a good top signal when they finally capitulate. I would guess that probably by the summer at some point, they're going to have it's just game theory. These people are going to take their money out and they're going to go elsewhere. If you're not going to give me the products I want access to, why would I give you any of my money? You can't tell me that it's a scam when are they smarter than Larry Fink? Is this RIA guy who's worked 5 years in finance smarter than Larry Fink that's telling me it's a scam? No.
I don't want
the credibility, right?
Yes. It's an overwhelming tsunami. Okay, well, with that comes volatility, and volatility is often cited as a reason actually to avoid crypto. Benjamin, in just this week's Bitcoin's impulse, that was one of the reasons that pushed us into the 60K range, because it was driven by options and futures markets, not necessarily the massive Bitcoin ETFs. And I know you noted offline how leverage is right now through the roof, and yet we have some people in the market. Notably, Alex Thorne of Galaxy Digital noted that the CME is now 25% of open interest. It's cash secured. And he's arguing that leverage is not an issue this time around. So tell me, is leverage going to continue to be a catalyst for volatility in this market? Is it still a concern for investors and traders?
I don't think leverage is so much of a concern. It's more about where the leverage is. So if the leverage is coming from the centralized side in the TradFi side, that's not so bad. But if it is leverage that's coming from the USDT Perps, then it's a lot of unsophisticated allocations basically happen. So those will get wiped out time to time. But if we think about whether we'll have 2019 type of crashes or not, we've not seen at least for the past 500 days. So we can fairly say probably it's not coming back anytime soon. But like a lot of points need to coincide. Probably we still get 10 to 20% drops time to wipe out leverage, to cool down the funding rates and so on. But yeah, leverage is always going to be there. The way it gets portrayed out is going to be questionable. For example, if you see in the run from 18th of February this month, open interest was not going up that big, and it was in fact flat. And in the past 2 days, open interest basically completely got exhausted, and it just dumped like crazy. I think nearly 19,000 BTC equivalent of native open interest basically got dumped in the past 2 days, right? So was this shorts capitulating? Yes. Probably it's also a few longs which were getting out. Yes. There were new longs that were getting in as well. Yes. That's why now that a lot of shorts have gotten capitulated, they're penalizing longs, and that's why the carry trade becomes even more attractive, right? But the biggest of issue is not leverage right now. It's about whether these flows will continue. And I think JJ will cover about the leverage that's happening on the TradeFi side because of the supply shock that possibly could come in on BTC, and how pile up on options and coin margined instruments basically people start getting in, and how that can affect when it finally decides to unwind. Because as it gets expensive beyond a point, the risk gets higher, and all of these funds or any sophisticated actors, they're responsible for those risk metrics. And if the risk allocation on each of the trading desk basically shoots up, and now they have to unwind. Now, when they start to unwind all that leverage, that's when it gets really crazy. We need to wait and see if that is going to result in a huge drop or not. This is a new paradigm, to be honest.
Yeah,
because
new paradigm.
The leverage is not from, yeah.
Yeah, well, no, I'm laughing a little bit because we're echoing, and I feel like we have a constant theme here that is important for all the listeners here. The paradigms are shifting. They're shifting in front of our eyes. Right now is the time to be paying attention, studying them, and we can't actually go too far ahead of ourselves and start to make all these ideas about where the market's going to go and exactly how it's going to play out, exactly with the question about leverage. We have to continue to monitor. I do want to come back because I know we're going to be covering the markets, and JJ is going to break that down. So I do want to come back to that. But the sticking a little bit on gains, because in the past we've talked a lot about the leverage and being a catalyst for growth, and specifically in the altcoin markets, because we talk about this risk curve narrative. You start in Bitcoin, you move to Ethereum, and then you move down into the smaller cap to get higher risk as the market matures. And we're already hearing a little bit of a narrative this cycle. It's going to be different. And again, I go back to Alex Thorne. He had a long post that he put on X, I believe, yesterday. He talked about the fact that now that the money's going to be locked into a Bitcoin ETF or Ethereum ETF, you're not going to see those flows move down the risk curve because they're going to be sticking in TradFi vehicles. They're in a different vehicle than being on exchanges. What is your take on, I would say, the altcoins market to go a 5 to 10x after the halving? Is that still on the table? If the leverage starts to move away, more of the allocations in these ETFs, is that still on the table, or are we going to see something even crazier as this market expands?
So here's what I think. I think he's completely wrong. He's like 200% wrong.
Throwing some fire. Alex, you're welcome to come on here and defend your thoughts.
Right. He's absolutely wrong. He massively underestimates why people even allocated to alts. So the reason why anybody in the entire 5 to 7 years since Ethereum went on an ICO and brought in ERC20 tokens, why people were going into alts is not because they were lacking TradeFi vehicles to park money, whether it is US money or Western Europe or Singapore. Any of these people, they were not going into alts because they could park money in a safe way. That was not the problem. The problem was that Bitcoin was already expensive, right? And it is not easy for a lot of the world still to access Bitcoin or buy it in large amount and hold it. And as diminishing gains continue for Bitcoin in due time, you will continue to see more and more people interested in higher betas where they can deploy into. Even in this cycle, in the past few months, we've had these discussions in the podcast as well multiple times. When BTC is running, the next question is, okay, what is the beta to BTC? Can I go to ETH? Will I get better gains? Now ETH is running. Now already people start talking about which beta do I go to? Shall I go to LDO? Should I go to ARB? Should I go to Optimism? Because I can then capture a higher beta. I don't want to be I don't want to be on the waiting mode for ETH to do a 3x, while let's say Ape or Aave or some other token which has a much lesser market cap does a 5x or 10x. So that is a gambling quotient in this market that is irrespective of which country we come from, whether ETF vehicles existed or not. Like ETF vehicles have existed for a while. We've always had Canadian ETF. We've always had a lot of ETP products in Europe. So it's not like ETF never existed. So alts will always continue to see money, because the other thing that basically happens is that as more money comes on to ETFs and Bitcoin goes up in price, you have to remember the rest of the world has also been holding Bitcoin for a while. A lot of US users have also been holding Bitcoin for a while. Now they're all rich. They can sell it and now they want to gamble, or they can take that, go swap it to WBTC, go to DeFi in ETH section, and do some gambling over there. Do you really think they're just going to keep it on their hands and everybody's going to take that BTC they already hold and park it into an ETF vehicle? Not all of the money. So if they have 10 BTC, they probably put in 9 BTC, and that 1 BTC is still going to come in. And remember, as a result of BTC value going up, everybody's collateral value goes up. So let's say a fund who's sitting in Dubai, which had like 10 BTC when they bought it at 15K or 20K, and now it is already 3x. Now they have 3 times the collateral value. Now they can go to a prime brokerage and take a 25% loan, which immediately gives them access to new USD, which they can take it and go and buy TIA, SAI, SUI, Aptos, Pepe, Flocky, anything that they want. Why wouldn't they? Why would they sell those Bitcoins? They don't. This is the liquidity game. BTC has now become a liquidity machine. It is generating fresh USD out of thin air in a way. It's not thin air because actual USD came into the market to push up these ETF flows. So all that is not simply going to go and sit into more Bitcoin. It will flow into alts.
I think we just got a master thesis on the prospector mindset for Bitcoin and why this is not going to go away. I just want to summarize here a little bit for those who are a little perhaps worried that this cycle will truly be in fact different. There are many people that already have allocations both to Ethereum and Bitcoin. As those start to rise, JJ, you've commented on the wealth effect. That's going to give them the feeling that they have more money, which they do, and they can go deploy it in other places to continue to grow it, which is going to grow faster. So they're going to be looking for higher spec items, which for a variety of reasons are sitting on different exchanges, but for a variety of reasons can really pop. So
it's the scene from Wolf of Wall Street with Matthew McConaughey, where he's saying you don't want them to take that money out. You need them to stay on the Ferris wheel, right?
There you go.
Show them something new, right? Something new.
That's right. That's right. Well, we're gonna at the end of the show, we're gonna come back and talk a little bit about some of these picks. But I think there you have a good reason to stay optimistic that the altcoin market is going to continue to stay robust. But let's turn our attention to the existing markets as they are today. I was looking before the show. Bitcoin was trading around 62,000, just under 63K. I can't even believe I'm saying that. Just I think on our last show, we were sitting at 57K. Ethereum's at 3,400. But we've got a lot of activity sitting in the options market, as well as the open interest looking a little bit crazy. JJ, from what you're seeing here, this looks unsustainable, but tell me, am I wrong?
I mean, it depends on the flows, right? Like we could say it's unsustainable. It's going to pull back any minute now, and then these flows just come in and keep overwhelming things. It won't matter in the slightest, right? Like we look at these time frames, we see RSI is getting extremely overextended, but that doesn't mean it has to stop here. Like I think we could look at late 2020, early 2021, just to see how crazy things can get. This RSI still has some room to run. If these spot flows continue, there's nothing to say we can't go over all-time highs within the next week, 2 weeks or so. It's just, it's kind of a wait and see. Like you have to be aware of where we are and the overextension that exists here, but at the same time, don't be in a rush to obviously take all of your chips off the table, because this could get a whole lot weirder in the days to come. Like, I look at it like, if you caught the move from 40K, 50K, etc., like, just be smart. Obviously, don't over leverage yourself and end up getting wicked out on like something we saw yesterday, where it's just a 5-minute glitch that sends price down, takes out liquidations. Like, be aware that those things are going to happen when price moves this violently. But if you're just holding spot, you can't really go wrong in this scenario.
You can't go wrong. Well, I just want to give a little bit of context. Just this week, and I'm looking at some numbers here. Net inflows, 520 million, 576 million, 673 million, 612 million going just into BlackRock's ETF. Now, at the same time, we have seen outflows coming from GPTC, which had slowed down to the double digit, 44 million, 22 million. It's now picked back up a little bit. But I mean, those are monster flows. I mean, we've talked even last week talking about, stay long until you're wrong. As long as these flows stay strong, this is incredible flow.
Mm-hmm. Yeah, it's undeniable, right? Like, there's just simply, at least at this point, there's not enough coins to be found for the demand. There's not enough people willing to sell below all-time highs, and a whole lot of people that want to buy it below all-time highs. And it's just creating this massive imbalance, which is leading to these extreme moves.
Well, I want to ask a little bit more about those extreme moves on Tuesday's session. For all those who are out there, they probably heard it. We're going to talk a little bit about that. We really uncovered exactly what had happened, what had propelled Bitcoin past 57 all the way up to 60K, and where we're sitting today was really driven more by this gamma squeeze. I looked at the options market this morning, 6.5 billion on Deribit in options volume, and I think if I go back to previous shows, it's been a fraction of that. So break down for the audience right now, what exactly is happening in the options market? Is it giving any signals? Again, we talked about flows being one component that's going to tell us how long this is going to go, but are the options starting to signal that we may start to see a little bit of a pullback? And before you answer that question, I want to thank everyone for being here. I see Simone, Scott, I see someone from Ukraine. I can't pronounce your name. Apologies, Adam. And 251 Legacy Trail. Thanks for all for joining. Hit the like, subscribe button. Share this with everyone, your sister, your mother, your brother, your friends. We love having you here. We want to hear your questions, and we want to bring on as many people as possible to the Sophisticated Trader show. All right, enough with that. JJ, walk us through the options. And again, answer the question, are we looking at something, at anything that's going to show that we may start to see a slowdown?
I mean, what we're seeing now is just reflexivity in action, right? Is that Bitcoin was kind of silent in that 40 to 50K region, especially after the ETF. There wasn't a whole lot of interest in options. We could basically see this looking at the implied volatility chart. And this was something that we were pointing out throughout, like just how beaten down it had gotten post ETF. Now it's back at those highs. Like, the amount of volatility that the market was requesting at that point, they wanted this long exposure in case Bitcoin had this kind of blow off immediately following the ETF. Then the initial week or so disappointed, and you saw it just sell down to just absurdly cheap levels, given all of the catalysts that we see coming up this year, whether it's rate cuts, the halving, etc. Like, the market was not adequately priced for the upside, and then it just rapidly repriced itself. And now you have a whole lot of demand rushing into the upside. And like we said, like there was a lot of people extremely off sides with their option selling in the 50K region. They got squeezed, so they had to buy a bunch of positions. And then you have just speculators rushing in, and then people who just want to have this optionality long-term over the course of the next year or so, to have that exposure in case Bitcoin goes to whatever, 250K in a single month or something as we go along here. So there's just a lot of demand for these products. And as a result, the market makers are having to reprice them rapidly. So we look at like the premiums, they just really shot through the roof in this past week. And that's not to say they can't go higher, but it is reaching a point of unsustainability, in my opinion, just how quickly it shot up. Like, and we kind of see this here on the term structure. So you see between February 29th expiry and the March 1st expiry, the implied volatility level shoots up to 91, and then it's going down. So this is kind of signifying that people are selling longer dated exposure to hedge their nearer dated exposure. And that's probably, like, we saw this pre-ETF as well, is that there was a huge spike in the front end, and then it died down. And we obviously saw what happened to implied volatility in the weeks that followed. This is kind of how it looked at the same time. Like, we had this massive run up, and then it was dropping down. Then the actual implied volatility levels did drop down. So Whether that repeats itself again or not, and we actually see this kind of sinking of volatility over the course of the next month or so remains to be seen. But it's kind of the options market signaling to you that we're reaching kind of an unsustainable structure here, right? Like there's a whole lot of people that are going to have to unwind these positions, as Benjamin was saying. They've entered short dated calls to hedge their longer dated ones sold, and at some point this is going to unwind. Whether that's right now, whether that comes above 70K, we don't know, but just realize where we are in the map and that the positioning isn't necessarily sustainable for I would not be in a rush to buy options at the premiums they're currently trading in. Anytime you see kind of a wild run up like this, usually it's unsustainable and you're going to end up paying way more in premium for the amount of move actually realized over the course of the long term. But all that said, there's still a whole lot of options buying going on right now from people with a lot more money than me. So maybe they,
well, as I mentioned,
hopefully they do know more and we just keep
right.
ripping. But I kind of see some signs for caution here for options.
Right. Well, I want to point out, as I mentioned, options volume 24 hours is 6.5 billion. Futures is also up 4.4 billion. Right. So we're seeing a lot of activity both on these structures. One thing that's come out is that there is this discussion about previous cycles. We talked about leverage being a way to grow the wealth, right? To use this as to get access to just use these products, futures, primarily to get leverage, right? Now we're hearing that it's more about being able to do some kind of hedging. And I guess, Benjamin, do you think that's true? Is that narrative taking fire? Do you think this is actually people hedging, or do you think that you still have enough Degen souls out there that want to play this and they're using this more to try and max out their account?
Yeah, there's definitely Degens around. I don't think Degens
are you in touch with a few of them?
Yeah.
Anywhere there's a market, you'll find Degens.
Yeah. That's the thing. Somehow everyone thinks that just because this market is maturing, ETFs are coming in, volatility had gone down, doesn't mean Degens are gone. They're just jumping from one instrument to another or finding a way to play the same thing, right? You will always find the 20x leverage, 50x leverage guys. That's not going to go away.
No, not anytime soon. Okay. Well, and then this is a PSA for all those who are out there. I think what you heard from JJ is like, listen, this is an overheated market. That doesn't mean it can't go higher. So be prepared for that. But this is not in time to be jumping in. I think the analogy used last Tuesday was this is like jumping into an avalanche and expecting to ski. That's a dangerous
We saw that yesterday, right? Like how quickly this thing can reverse when the slightest thing, like Coinbase went offline, that threw off a bunch of oracles on different exchanges, and we see just kind of whipsaw price action over the course of a short time frame that could completely annihilate you. So just recognize where we're like we said, just hold spot and chill for a bit. If you're more sophisticated, you can deploy some more advanced strategies of kind of managing your volatility exposure levels, but this isn't a time for your average person to be trying to pull off anything that's over their head, for sure.
Well, I do want to spend a little bit. Oh yeah, Benjamin, go on.
Right now, if there is a pullback, that's when leverage portion should enter. Right now, the problem is that everyone is trying to chase, and that is getting really dangerous. This is not vertical accumulation. This leg at least, it's vertically accumulating a lot of longs. So I don't know whether the flush will come now or the flush will come at 70K or the flush will come at 80K. We don't know that. So that's why it's important that you definitely have a spot allocation. I think most people do. It's the problem of they have the spot allocation, but they're not making more dollars. They want to make more USDT. And if you are taking smaller size positions as leverage, that's okay. Let's say you're taking up 5% of your balance and taking up a long position because you want to make some additional USDT on top of your collateral that is in Bybit, right? And that's fair. That's fine. But where's your invalidation? Right now, the problem is you can drop all the way to 55K and it can still be bullish. And, you don't need to, now, would you close your position or not? So what is the loss you're willing to chew? That gets complex. So 5% of the balance, 10% of the balance, that's all fair trades, but you cannot take up a fat, let's say on a $1 million account, if you take up $1 million position at 62K and think that will definitely not get hunted, that is the time when you get hunted. That's the tough part over here. It's not about capturing the move. It's about if you get a pullback like what we got yesterday, then you have a chart. Get in there, scalp out quickly, in and out, because the funding rate is also so high. It's 120% APY annually. Like, that's crazy. That's the carry trade game. So you cannot use it to leverage on top of things.
People underestimate how many chances this market's going to give you to get back into. Like, I don't think this time's different, and we're never going to see another washout. If you look at this chart here, like we go to 2020, right? Before it broke all-time highs, there was a washout from roughly 19,000 back down to 14 or 15,000 or so. And then again, another washout there. And then you see even when it ran up to 40K, it ultimately went back down to below 30K and gave you another opportunity. So just know that there's going to be opportunities to get on when the risk reward is much more slanted in your favor rather than buying the top of a parabolic rally and getting ripped.
Yeah. Well, we've got some questions in the chat. They're asking a little bit about alts. They're also asking about options. So I definitely want to give us enough time to get into both of those. So in a minute, we'll talk a little bit about Dixie, some of those external factors which could play into one of those pullbacks, because we do have information coming out the macro side that could play into that. Before I do, a couple of things. I want to say hi to Ashigar, T-Bird, Hello World from Toronto. Hello, hello. I hope you're staying warm up there. Kevin Armstrong and JV, welcome, welcome. If you haven't already, hit the like and subscribe button. Share this with whomever you can. And if you're looking for a little bit more support, this is our one of our many times to call out one of our supporters of the show, which is CoinCall. CoinCall is an excellent place to start your options journey, trading options. They've got all the major currencies that you want, and you can trade perps, options, and even spot. And on this show, and we'll do it a little bit later in the show, JJ is going to show you the interface and a little bit about how he likes to trade on there. Of course, today he's saying don't get into any new positions. So a lot of that's the mindset. And if you've got questions about how to think about options, I said it before, I'll say it again. He's got a great option series. He's got another video that he's working on right now. It'll be coming out very soon, but definitely check that out. It's one of our playlists on the channel. It's going to tell you how to think about playing options, not just the mechanics of how to place a trade. So with that, let's get into the Dixie. Last I looked at it, it was still trading the 103 range. We really haven't seen much movement here yet, JJ. What are you expecting as a catalyst that's going to finally give us an impulse up or down?
It's actually looking pretty weak this morning. So we had some, I guess, soft macro data that came out in terms of PCE and job reports. And now the market's betting on rate cuts coming as soon as June. So I think we'll see that priced in the Dixie here over the course of the next week or so. It's probably going to fall below its 200-day moving average. And then ultimately what I'm going to keep an eye on is how it reacts around 103.20 if it gets down there. Because if it loses, what this is the 50-day moving average. If it loses that, you can see there's not really any clear signs of support here until we reach the yearly open levels back down around 100. And at that point, I think Bitcoin's well above all-time highs. So definitely something to keep your eye on. It's still holding on to the 200-day moving average, but it's looking very weak. It's lost the 50 RSI mark here on the daily. So it's definitely looking like it's breaking down after that massive rally January through February. And I think what we see now is Bitcoin reacting to that. We have basically, since the top came, you can almost sync it up to the day. Bitcoin was in that ultra low volatility environment, just kind of chilling at 42K or so. Let's pull it up. Yeah. So Bitcoin was the day that Dixie topped, Bitcoin was right around under 50K. And then we just see this massive run up as Dixie's fallen. So if Dixie goes back to the early open levels, this is just going to be off to the races. Brace yourself. But keep an eye on that, see how it reacts. Obviously right now at the 200-day, and then following that at the 50-day at 103.20. And below that, we're off. So exciting times.
We're off. You know, it's going to take everyone by surprise if we hit the all-time high before the halving. I think Arthur Hayes had a call for this year to hit an all-time high of 70K before next year, giving some amazingly high price target. I mean, I want to hear both of you guys. I mean, if we hit 70K, and I don't think that's out of the realm of possibility. You see a weaker dollar come in, and there's a variety of catalysts for that. If you look at the macro calendar, we can cover that next week. But there's a variety of reasons we could see a weaker dollar. If these flows continue for even a couple more weeks, I mean, I think it's very possible that in March we hit that 69K or even higher.
Yeah, absolutely. Like this is just, it's reflexive, right? So like we were saying before, people have gains, they tell other people about their gains. Everybody has access to this thing now. It's no longer like this viewed in the eyes of traditional money as this Ponzi scheme. It's an acceptable asset, and when the dollar's in a weakening cycle, it's going to be viewed as a flight to safety. And that's certainly how these institutions are selling it to people. They have brochures, meetings going on, etc., basically around the clock, that are just centered around why you need to be allocated to Bitcoin in this cycle. And it makes sense that the market's gotten smarter. I wasn't expecting it to break all-time highs before the halving, but these flows are undeniable, right? Where you can't deny the evidence that's in front of our face that there's just this overwhelming demand, basically insensitive of price below all-time highs to get exposure for this. So yeah, things could get extremely wild this year. Just strap in.
Yeah, strap. And I would argue next year as well. I think I think this is going to have some legs. Do you guys agree?
Yeah, the type of people buying it, right?
Yeah.
Like we've been saying, they're not looking to flip this over the course of the next few months. This is a long-term allocation they're making, which is extremely bullish.
I've got a question here, and I think it's relevant from Adam S. Real quick, Benjamin says, "What are your thoughts on how high BTC dominance will go this cycle and why?"
That's
a good question. You want to take that one, Benjamin?
Yeah. BTC dominance is a trick area. Although it has been going up, the problem is that there is a parallel economy situation that has come up with odds. Unlike the previous cycles wherein we had to wait for BTC to finish its run, then an overflow come to ETH, and then an overflow come to Solana or whatever, that's not the case this time. You have a very parallel economy basically going on. If you go to the APAC or MENA region, people are directly jumping into alts. They're not even bothered about what's going on with BTC or ETH. ETH is now just a vehicle to get into the gambling ecosystem, or Solana is just a vehicle to get into the gambling ecosystem. We have to also remember that Tether has cemented its space as well, right? So if people want to get exposure to crypto, they come into Tether and then they decide what they want to play around. There's so much investment opportunities. There's so many startups in decentralized AI and all that, crap load of things, which is basically coming up nonstop. They're all raising funds, and access to such angel investments is also there. So that's why you are basically seeing, if you take total 3, it has run up like crazy, right? And it was much more bullish even before BTC broke out of the 42K range. So money into alts have been coming also at a drastic pace, and dominance, even though it is going up and we're seeing some spikes, I think if someone is going to play the alts game, the BTC dominance wouldn't matter. I wouldn't bother so much about it. That, okay, it's now going up to 55, it's 60. Yes, we are bleeding on alts a little bit. Probably 20-30% drop on a few alts happen. But then it will stop. It will blow up. It will once again, alts will fly up. So it shouldn't really matter how much we worry about, whether BTC dominance will go to 80 or 90% like in the 2017 or pre-18 levels. That's going to be very doubtful. So you probably chop around over here, do some rotations, probably goes to 60 or 65, but I think that's it.
So I think
that's a very bullish situation, in fact.
Yeah, very bullish situation. But I think overall the point is that as a metric is going to lose some of its effect because of the way that the market is starting to mature.
Yes.
Yeah. Okay. So Adam, hopefully that gives you some perspective here from the team. All right. I want to get a little bit into positioning now, because we had a question here. I think one of them was specific to think about Sol. We've got the Ethereum ETF, which, we haven't talked about in the last couple of shows, but it feels like this is the massive whale. I know Ben Lilly is so bullish about this, but maybe not specifically about the ETH ETF, but he's talking about all the catalysts for Ethereum right now with the rate structures and the rate markets and how they're maturing. He just put out a piece for those who are listening. If you haven't already, definitely check out Espresso. He just wrote a piece on that, and he's sharing his thoughts on how these rate markets are going to mature, and then the yield for Ethereum and what that's going to look like over this cycle. It's a fascinating read, and hopefully we can get him back next week to talk a little bit more about it. But What are your thoughts there in terms of Ethereum and the ETF coming out and being a catalyst for all the market, or being kind of standing on its own? Like, what is the performance of Ethereum ETF, and should people spend more time thinking about that rather than some of these other alternatives right now?
Yes, I definitely think Ethereum ETF or Ethereum ecosystem situation is much bigger than what we are facing with BTC. With BTC, what we have is the Ordinals BRC20s ecosystem. Yes, sure, that's already doing well. There's a lot of buying in China. There's a lot of projects spinning up in the APAC region, and people are making a lot of money and losing a lot of money. All that is there, but it is so impossible to build a L2 or an additional layer on top of Bitcoin. Like we've seen Lightning Node not pick up that much still, right? But Ethereum is still the platform, is still the internet layer when it comes to this currency that we are working with. And the yield models, what, for example, Ben Lilly has been working on, that's fantastic. When I go through that article and all the other things that's been brewing, I mean, we put in some vaults wherein it's like 38% APY on ETH and without impermanent loss. So in the previous cycle, we had DeFi pop-up, which was the first cycle, and you were getting all these incredibly crazy APYs, but you had so much impermanent loss, and there's a lot of things that were still bearish, even though it was bullish. Like you can get into those tokens, you can get those token rewards, but it was all going to go infinitely down when you look at against ETH. But now with Uni working on a proposal to give fee rewards for Uni holders, the mechanism by which DAOs will work will change. The mechanism by which staking and restaking layers, how they are contributing, the point system, all of this is incredibly bullish. It's an ecosystem. It's a country. ETH is a country. It's an ecosystem, and it's basically what Solana is trying to do. Solana is just trying to be a copycat of ETH, and it's cheaper, so there's a lot of people going in. But when you look at the project's retention time in Solana, it's very short. The project from the last cycle, it doesn't even exist in this cycle. Nobody's doing much of stuff. You can count the number of projects which exist in the cycle. But take Ethereum, Aave, Compound, all these guys have survived. They still have crazy amount of TVLs. So many vaults, so much activity, so much buying, lending, borrowing activities that still happen. It's still much healthier. Even when FTX situation happened, DeFi was the one which basically stood straight. NFTs went down like crazy. Everything went down. So ETH is a different beast. And I am complete agreement with Wendell. He's a ETH maxi. I'm a BTC maxi. And I've been thinking of expanding a little bit into, being a Sol maxi as a minor in my, PhD. But that's as far as it stops, because if I build a product on top of Solana, I'm 100% sure the product is not going to survive more than a year. After the bull market is over, it's just going to die. But the same doesn't happen on ETH because of the deflationary mechanisms that's built in, and the way it works itself. It's fantastic. It's not cheap, yes, to operate. It's not cheap. That's the only reason people are going to AVAX or Solana and all those. But those are all the tourists. Like I've repeatedly said, TVL tourists will keep going around, and they'll come back once again where there is stability and where there is actual growth possible. And that's always Ethereum, right? So Ethereum ETF, I don't know what is the odds. To be honest, I'm not so confident that it will go in like what BTC ETF was able to do. I don't know if ETH ETF will get through in the first go. BTC ETF had to go through nearly 5-7 years of hard work to get where it has. So it's not the same route with ETH. Probably they pull back some applications, they wait for it, but we need to wait and see. Still,
Yeah.
Anyone who thinks less than 10K for ETH for this cycle, yeah, I don't think so.
Have fun with that. Well, and I just want to point out, I've got a chart up here. Unfortunately, I can't share it right now, but it's looking at some of the dates. So for the VanEck Ethereum ETF, the SEC final deadline is May 23rd. The day after for ARC21 shares, and then one for the hashtag NASDAQ. For iShares Ethereum Trust, that's going all the way out to August. So it's not all bundled together. It's possible that you could see some delays going into later in the summer, which I imagine could offer a pullback opportunity if we don't see that first approved. And to your point, it's possible, although I would argue less likely given BlackRock's track record on bringing these ETFs to market. I think I saw yesterday. It was something like 900 or 800 to 1, right? 800 wins to 1 loss.
I'll take those odds.
Yeah, I'll take those odds as well. Okay, so you just pointed out, and dubious speculation, if you will, to borrow from another one of YouTube greats on analysis. 10K is a minimum that you would expect for Ethereum, assuming this market goes. I mean, and again, I think it's the flows continue into the ETFs. We see a rally coming after the narrative around the halving continues from a Bitcoin perspective. And then if we get these ETFs with Ethereum, it feels like it's putting rocket fuel on a bonfire.
Absolutely.
Yeah.
I can't believe that by the way, just to plug this one more time, because I know we haven't shut up about it, but ETH is still at a 10% discount. It's literally just free money. Just pick it up. If you have access to a brokerage that is ETH, why would you not buy ETH at a 10% discount?
I don't know. I think that's the way we've been talking about trading it now for a month or so. And so even as it does these moves every single day, buying at a 10% discount to the rest of the market feels pretty darn good.
Yep.
Yeah. Okay. I do want to get into and ask a few questions about some altcoins. And JJ, we're going to wrap up the show talking a little bit about options. And when we do that, we can look at coin call. I think we have a couple of questions from the chat. I'm going to get into that. So from an Ethereum perspective, Benjamin, you're less confident it's going to happen with the timelines I just gave. JJ and I are perhaps more confident, just again looking at the track record for BlackRock. I want to ask you, just again, looking at the other ecosystems, if people are asking you today, what are some other places you're looking at in terms of coins? Is now a good time to be putting some allocation in 1% to 2%? You talked a little bit about doing some yield with options or with futures, someone putting 5% into some of those trades. What about putting 5% into allocation for some of these smaller caps, holding them for another 18 months? Is now the time? Do you wait until the halving? How should an investor think about that?
That's a tough call, to be honest.
I know, that's why I asked it.
Yeah. Will there be a pre-halving crash or not? This is the first time we are seeing almost close to an all-time high for Bitcoin or any of these assets, right? So this really is something fresh that is happening. So one way to go about it is, if you have a plan to allocate like 5%, for example, into SEI or SUI or all of these new L1s, allocate 2.5 and hold the rest of 2.5. If there is a pullback, then push it in, because there's always a pullback. Okay, BTC has to sneeze 5% and you'll see alts dumping like 30%. So there's always a pullback. So BTC sneezing will happen. It's not like it won't happen. We've seen even 5 to 10% dumps on the way, even in this run since January. So it will happen, and there will be an opportunity. And yeah, there should be entries. So I wouldn't go all in on an allocation yet.
Okay.
The time is still there. So partial allocations, maybe buy on a daily basis, or buy on a few days once. If there is a drop on a retail basis, let's say, if a token drops on a 4-hour RSI below 50, and if you're confident about the token that it will do well on an 18-month period, then probably buy in at that point, because you're buying into the DCA bearish momentum, which is okay because it will go up once again eventually.
Mm-hmm. Okay, yeah. So that's a strategy you can consider. JJ, any thoughts there you want to share?
I agree with that. It's just like I was saying before, just realize where we are on the map. Like, can it go much higher? Yes, but is most likely anything that you enter now, your cost basis will be retested over the course of the next few months. So just have a plan for that and be prepared to buy back. Like, don't go all in at this level on anything. I would just suggest a little bit of caution there and recognizing kind of how overextended we're getting on some longer time frames. So just be aware.
All right. Well,
yeah, I mean, if anyone was thinking of going all in, then it should be ETH and locking into some of these Pendle ecosystems that Ben really talks about. So follow his newsletter, read his post.
That's
right.
Right.
And definitely for all those listening,
that was a great
here,
read, by the way. The 38% ETH yield
trade.
I loved
it.
We're gonna put a link in the description. And he does have some other products that are going to be coming out very soon relative to altcoins. I can't give too many more details. I chatted with him offline. Super exciting stuff. I can't wait for him to debut it here. And I think we're going to try and use the channel as a great way to showcase some of that, and as well as some of the other things that we're building in the background that you're going to be able to enjoy. So definitely hit the like and subscribe button and share this with other people, because if you're here now, you're going to be in the know as we start to roll that out, and these new products that come out focused on the alternative coins are things you're not going to want to miss. Believe me, they're too good. And before we go in to look at some of these last trades with the options, I just want to say for everyone out there, if you haven't already, definitely check out CoinCall if you're interested in trading options, perps, or spot, and you're looking for a great exchange with an elegant interface and competitive fees. It helps us when you go there, and also it's a great exchange to be working on, because you can see all the work that JJ's done to be on there, and he uses them for all of his options videos, and you can see exactly how he places his trades, as well as just the way he can analyze the market. But now, JJ, I want to come back to you and ask you, okay, right now you start off the show, you said, listen, this is not a time, don't jump into the avalanche. But maybe you could walk us through a little bit what you're seeing there from like the funding rates. So when people are asking questions, well, how do you know this is too hot? How do you know these premiums are too much? What exactly are you looking at in CoinCall that's giving you that information that's saying, hey, it's time to pause before I start to place a trade?
So I'm looking at the March 29th expiries right now, and we can just take a look at some of these out of the money calls. So 65,000 calls are trading at 4,400. $70,000 calls are trading at 2,800. So this basically means that we're going to have to get to all-time highs. If you were to buy either of these contracts, right, you're betting on price being above all-time highs just for you to break even. So in order for you to make money on this, and if you were planning to hold it to expiration, price would have to go well above 70,000 and hold above there by the end of March. So like when you look at these scenarios, the risk reward just isn't that great. For example, like just a week ago, we were looking at like March 8th contracts, out of the money calls, around 57,000. These were trading for under, they were a few $100 each. And you just see how massively they've run up, right? And that just kind of speaks to how underexposed the market was and how desperate they are to get exposure here. And typically, anytime you see people FOMOing, like the risk reward's just no longer in your favor. What you want to do is wait, like inevitably volatility will die back down again. It's not just going to go up forever. You wait for those times where it gets really beaten down, as we saw in February, and then the risk reward of buying options flips in your favor. Like obviously things could get a lot crazier from here, so I'm not looking to sell volatility at these levels, because then you could end up like those people who got gamma squeezed this week and you just have massive amounts of losses that you need to figure out a way to hedge. So I don't think this is necessarily an advantageous time to do that, unless you're doing like covered calls or some strategies like that, where if you are holding a full Bitcoin, you could sell like the $70,000 call. And I don't think you have to worry too much about it going too far beyond your break-even point at 72,000 and change. But it's just, this is kind of a time in the market where the move has happened. You let the market digest it, and these prices to reach some kind of level where they become more attractive to be a buyer. I don't think you want to be rushing in here unless you have some kind of definitive edge, way beyond anything that we currently have. If you have some kind of inside information where, hey, Bitcoin's going to 100,000 in a month, then by all means go ahead. But if that's not you and you're just blindly speculating, the time to be an options buyer is certainly not now, in my opinion.
Okay. All right. Well, for all those out there who are looking to get an insight into how to actually use these options products, hopefully that gives you some taste, some flavor of exactly the way someone like JJ looks at the interface, is able to gather some data and detail, and think a little bit more about when is the right time to place a trade. Because it's all about when, not just about what you're doing. And with that, we are going to wrap up today's show. JJ, Benjamin, thanks for being here. I appreciate it. I think you guys gave a lot of insight to the market. Hopefully all those who are out there, thanks for joining us today. Hopefully you got some things to think about as the market gets a little crazy. As we wrap up, I'm looking at 62,000 for Bitcoin. I'm looking at 3,400 for Ethereum. So a little steady from yesterday after some major moves. We'll see if that continues to change. Be sure to check us out next Tuesday and Thursday. We're here every week. We hope you are too. And with that, I will leave you with the same PSA every time. Keep some dry powder. This is Marconi White signing off.